Well, hello again, Solis Wealth family. Greg Solis here with the update. First of all, on the family, I got the opportunity to go to TCU for Parents' Day with Emily. So Monica and I flew out there, just had a good old time. Went to a football game, went to her sorority, met a lot of her friends. Emily is thriving and having a blast. Oh boy, keep her in your prayers. It's tough sending your baby off to college in Texas, but she's doing well. She's happy, and we had a great time. Nicole's doing fantastic. She's been doing this 75 hard thing, and she's, I think, on day 45, day 50. And she's just, boy, she's in great shape. She's having fun. Her grades are good, and so all is well with Nicole. And Jack is loving Orange County. He's been there now for about five weeks, and just really thriving there. Loves it, and he's happy. And so Monica and I are enjoying this empty nester stage. Completely different world for us, and boy, it takes some time adjusting, but again, we have some tears, but a lot of laughter and a lot of high fives and just kind of excited about what's going on. So, hope you and your family are well also. Again, hope to see you at the client appreciation party coming up here in early November. It's going to be an exciting time. We're going to have it at the new house, so hopefully you'll be there. It's going to be a good one. Market wise, boy, it's been a tough couple of months. Frankly, we hit a high. Well, we were working our way back to our all-time high in the middle part of July, right around July 23rd. The markets recovered quite a bit, but since then we pulled back quite a bit. About 6% on the S&P 500 is how far we've pulled back just in these last couple of months. And so we're off about 10% from our all-time high that we hit back in early 2022. The Nasdaq's off about 17%. So both of them have sold off quite a bit over these last couple of months. Question is why? What happened? Well, frankly, there's three things that we're kind of watching that are looming, that are creating a lot of volatility. One is still the inflation fears, and that's being driven by energy prices. Oil has skyrocketed. We're up to about $95 a barrel right now, and that's creating more inflation fears. Higher oil prices could potentially create more inflation. So that's an issue. Now we're starting to talk about government shutdowns again. Remember that conversation? Well, here we go again. So politically, we got those a little bit of wrangling going on with potentially having a shutdown. That's causing some problems. The third one is what's the Fed going to do? Are they going to leave rates higher longer? What's going to go on with interest rates? But we see the 10-year Treasury now got all the way up to about 4.6%. That's a 16-year high. We have not seen yields that high since back in 2007. So this is a different environment that we haven't seen in a long time. Now, the good news is, as you've heard me say, as these yields are topping out here, hopefully we're getting close to the high, we're locking in those higher yielding bonds and fixing those rates in. We sometimes we explain it like this. It's kind of like when mortgage rates drop low as they did a few years ago, and you could refi at 2.9%. You want to lock those 30 years in low. You don't want adjustable rates at that time. But now, of course, it's the inverse from an investment side. Lock in those higher yields now that rates of hopefully getting close to an all-time high. So we think there's opportunity here to lock in some of these higher yields with interest rates going up as high as they have. But it's going to be a little volatile here, no question about it, as we kind of watch what happens with inflation and the Fed, and certainly higher interest rates dampen the value of earnings on equities. And so that's what the market's trying to price in, is looking at the valuations. But technology's been pretty strong overall, but it's had a pretty big pullback. It's off about 10% from where we were in the middle part of July. But there's a lot of growth in earnings, a lot of growth in technology, and earnings have looked very strong, particularly looking into 2024. This AI stuff that's taking place, this artificial intelligence is real. There's tremendous innovation that's going on. So we think there's some opportunity there as well. So overall, everything has been a little bit volatile, kind of challenging, but we're still moving in the right direction from where we were back in the early part of 2022. We've made some good headway, but we got a ways to go now. And now that we've seen a little bit of a correction over these past couple of months. So hang in there. If you have questions or concerns, of course, don't hesitate to call us. You know, we're always here for you. My very best to you and your family. God bless.